Welcome back. Retail sales rose 1.4% last month, better than expected, but many Wall Street economists fearing that tariff concerns could have distorted the numbers. Joining us now, Coresight Research CEO Deborah Weinswig. Deborah was ranked Institutional Investors #1 retail analyst for 9 years. Thank you for being here, Deborah. So there's a lot that's been made about the potential distortions, the pull forward of consumer behavior to get ahead of the tariffs and potential price increases there. What are you seeing?
You know, it's really interesting. We've definitely seen a lot of volatility. We do a weekly survey of about 4,000 consumers. We've seen a lot of volatility in the past month, but it's been really interesting in the past week how consumers feel about their own situation has improved about 2.5%, but how they feel about the economy overall continues to decline.
Interesting. As you kind of study the landscape, which type of retailer or specific retailer do you think will be more insulated from the tariff pressure? And which ones do you see facing the biggest headwinds?
Our data suggests we compared everything, since basically the end of 24 to really to Monday. And the department stores seem to be the ones that have seen the greatest pullback. We're still seeing traffic to the malls at, kind of record levels. But a lot of those specialty retailers, Abercrombie, American Eagle, Aerie were notable in terms of their traffic gains or consumer intentions. So that's kind of the picture of the mall. And then once we move off mall, we continue to see strength in a Walmart, a TJ Maxx, anywhere where consumers can do one-stop shopping. But let me take that one step further. We are seeing when it comes to consumables that consumers are shopping many more locations to try and find the best deal.
Is that because the bigger companies, Walmart and the like, they have been able to use their scale as leverage essentially in their supply chain negotiations and be able to, obviously low prices are paramount for them. And so they've been more out in front of this, whereas smaller retailers haven't had that benefit?
That is really the critical question right now. So number one, I think that they planned ahead. Number two, I think that they're also able to, let's just say, cut expenses in other areas so that they're able to absorb this better. But, thirdly, because they have such a broad mix of product, right, they can also lean into more of something pretty quickly and be much more agile than, some of these smaller and other retailers. So it is a great question and really the question of the day.
Deborah, we were talking earlier this morning about the spread between Costco shares and Target shares over a one-year period. There's been all these reports about this 40-day boycott at Target. Obviously, a lot of culture friction regarding their Pride merchandise. I just wonder what you think the best path or off-ramp for those guys is at the moment.
So specific to Target versus a Costco or Walmart, their private label has been growing at a greater rate. And what we are starting to see is those retailers who have a lot of private label, who once again are maybe not as agile, are really starting to rethink that. And so I think with Target supply chain, et cetera, they may be a bit more distracted than some of the others as well, who have a greater mix of consumables and who also, let's just say, are a bit more disciplined in terms of their SKU or their items that they have both online and offline. So Target may just be facing challenges kind of across the board, one being their supply chain prowess.
Yeah, headwinds all over the place there. Deborah, thank you very much.